Hello and welcome to Morning Markets. Today we're going to be focusing on earnings from the largest companies within the financial sector and comments from the Federal Reserve. This week, earnings season really kicks into high gear when we've got companies in the US, the likes of Goldman Sachs, BlackRock, Netflix and Bank of America all reporting. In Europe, we also get semiconductor maker ASML reporting, so a lot for the market to digest, and we'll filter through that through the course of the week. But we're going to start in the financial sector in the US with the two largest companies within the sector, Goldman Sachs and BlackRock. Starting with Goldman Sachs, they reported earnings and revenues ahead of what analysts were expecting, so that's a good start. Profits more than doubled in the second quarter. If we think about where they were 12 months ago, profits were 1.2 billion. They've now increased that by over 150% to 3 billion, and this was ahead of what analysts was expecting. Now, over the last 2 years, a key component of their business, M&A, mergers and acquisitions, has been on a decline given the higher cost of financing. So interest rates around the world have been going up, which has weighed on activity. They're starting to see a recovery in M&A in the second quarter, and that's really helped boost corporate profits at Goldman Sachs. We're also seeing improvements or stronger profitability within their trading group. So their traders within equities and within fixed income are really contributing to stronger profits in the quarter. The bank has been challenged not only by M&A activity, but losses within real estate investment and consumer banking unit over the last 12 months. If we think about turning our attention to BlackRock, which is the world's largest asset manager, they also saw profits ahead of expectations, revenues in line with expectations. So we saw revenue growth increase about 8% on the quarter and up to 4.8 billion. The company is just benefiting from a larger assets under management, so it's accumulating assets and earning fees on that. So assets were up 1.7%, a staggering, now managing a staggering 10.6 trillion. So moving away from corporate earnings to monetary policy, we heard from the chair of the world's most important central bank, the Federal Reserve in the US, Powell, was giving comments, which was quite timely given that we had on Thursday the latest US inflation report, which came in below what markets were expecting, which was a real positive. But Powell focused on both parts of his mandate, which is price stability or stable inflation and maximum employment. He highlighted or commented that the inflation data over the second quarter had been improving and given him confidence about the prospect of lower interest rates, but also highlighted that we're seeing cooling within the labour markets. If we look at the unemployment rate, it's now at 4.1%, its highest since 2021, and up from a historic low of 3.4%. So both parts of the mandate is suggesting a cooling, and suggests that actually interest rate cuts should come in the next quarter. So if we look at market pricing today, there's a 97% probability of the first interest rate cut of 0.25%, and then another one before the end of the year. So the market and Powell appears to be increasingly confident of lower interest rates ahead. That's all from us today. If you do like the content, please like and subscribe, and we'll see you tomorrow.